This strategy here is one of the newer strategies that I use, and this is only based off just the using the Tinkerson. So when you're using this, the first thing you got to look at is if price is holding on that Tinkerson. Uh, we know if you understand the basics of what the Tinkerson is, price is supposed to be riding on that Tinkerson. So the longer it rides on the red line, this is letting you know that the market is in a strong trend. If it breaks below, that's fine because you got two other levels of support anyway, which is your Kijun and your Kumo. So if you're looking for bounces at those levels, but this is going to be the Tinkinson bounce that we're looking at here for this opportunity, because actually you might be able to pull this one off currently right now once this 1 hour candle closes. The only thing you may want to be a little careful about is this flat Kijun here, which means that price needs to break this high right there to go for this to angle up and for the span B to angle up as well. So when you're looking at this market, especially with this strategy, you want to see if it's going to, first of all, close above the Tinkinson. Whenever price closes above Tinkinson, this is letting you know that price is going back to being bullish. So right now we're already seeing that we're bullish. We're above the cloud. We also got a golden cross, which is our TK cross over here, which is above the cloud as well. So this is already letting us know that we are still in a bullish market based off the 1 hour chart. So this was a small correction. I actually have my stop loss right here. I actually should have put it down here, but whatever. Uh, this is another chance to get back into the market. So what you're gonna look for is in this, write down these rules, okay? You need a golden cross first. So write that down, golden cross. The second thing you need is to identify where price is. Is it above or below the cloud? In this case, it's above the cloud. So you got two confirmations there. The third confirmation is going to be is price above the Tinkinson. Right now it is, yes. So right now it is a buy, but you need to wait for the candle to close, which you have 48 minutes. So even if you don't get in at a lower price like here, you still want to make sure price closes above the Tinkinson because price could still come down like it did here and close below. All right. So that's already two confirmations. And what is Chiku Span doing? Is Chiku Span above price? Is it inside price? Is it outside price? It's above price. So this is also letting us know that it's going to go higher. So this is the last confirmation. So once the price closes, the candle closes at whatever it closes at, as long as it's above the Tinkinson, this is a buying opportunity. So this will be your entry. Stop loss will be either here or here. I don't think you should go this low. That's too far because look at that gap. That's $1.82 to $1.59. So you may want to play with that. Maybe put it right there. That's a little bit more healthy, maybe 10-cent difference. But this is where risk management comes in place. Depending on your account size, if you have $100 account, you may want to put in one position for this trade. If you have a bigger account, maybe you could get away with maybe two or three positions. I suggest you have 2, 3 positions with a bigger account, a smaller account, maybe one position. All right. So, do we understand this strategy here? Any questions? I want to make sure that we got that part.
Okay. Sorry, I apologize, but if you could just repeat, if you could go through
Yeah,
those
I'll go.
points one more time, because my pen ran out and I'm trying to write it down.
No problem. Okay. So the first thing you want to know. Okay, let me actually turn this off real quick. First thing you want to have is a golden cross. We have
Right.
one, which is right there. All right. The second thing that you want to identify is the location of price. Is it above or below the cloud? In this case, it's above the cloud, so we are bullish. So that's two. One, two. Next thing you want to identify is the price going back above the Tinkinson. So this is going to be a key Tinkinson break to the upside. So we broke underneath. We're breaking back above it. So right there, that's three. And then
As
four,
price needs to close above Tkinson, right?
correct. And then the last thing is four, Chiku span is above price. So you have your golden cross, you have your price above the cloud, and cloud is bullish, and you have Tinkinson being prices breaking Tinkinson or above Tinkinson, and then four would be the Chiku span is above price. So those are your four confirmations you need to take this particular trade. Now here's the thing: will that trade always win? Not always, because in trading, it's not always going to be 100%. So this is the next phase that I'm going to give you guys is this indicator right here. So the ADXDI, it's a momentum-based indicator. This is letting you know that the momentum is still bullish, even though it has come down for a little correction. It's still bullish overall. The signal here would be William percent R being above this level, but we don't have that. But if you could trade it that way, wait till this gets above this level, which is it says 80, negative 80, but it's really supposed to be negative 20. So the person that made this version had it backwards, so that's fine. But you have to understand that if once it gets above there, that's your signal to buy. Now, if you're not using those indicators, you're trading just pure naked price action charts, then you could get in as soon as this candle closes, or right above, like I was saying, right above here. So that could be your entry. So this is trading without these two indicators. Trading with the indicator, you're just checking the momentum, see if it's still bullish. In this case, it's still bullish because the cloud, well, not this is not really the cloud. The DI here is still showing bullish signs. So, any questions there so far?
What are we calling this strategy?
So this strategy is called the Tikasen breakout. So you could say TS breakout strategy because this just price is crossing back above the Tikasen. So make sure when you do this, if you're gonna trade it just price action, which is price action right here. This is a so far if it closes like this will be a piercing line candlestick formation. So if you see that piercing line candlestick formation, your entry would be right above the high. Or another thing you could do, go to the 15-minute time frame, see if you could catch price, dipping lower or not, and catch a lower price. But you're still thinking bullish because even right now, this is saying buy. All right. So you just have to wait and see what happens here. If let's say in the next 43 minutes, this candle closes as is or closes a little bit higher, you put your entry here. Let's say the next hour candle starts coming down, right? Let's say it starts coming down this way. What you could do is start moving your entry down lower so you can walk down the trade. As long as it does not trigger you in, you could walk down the trade. All right. So that's one way you could enter in that. All right. Has this made sense to everybody? If you have questions, feel free to ask right now and say
So
what
we putting a buy limit in is what you referring to.
buy stop.
Well, buy stop because it's trying to go hit it up, right?
Right. So let me actually put that buy.
So once it closes over top of this, what level is that one you talking about?
Hold on a second, and so what level is the entry?
Yeah.
So the entry would be at $1.81, 788.
Because that'll close.
Yeah, that's if it closes as is right now, this was where your entry will be at because you want price to break that high. So once it breaks that high, this is letting you know that price may start pushing in that direction. So it's not always guaranteed, but you're just putting the possibility higher in your favor. This usually works out a lot of the time just because of the momentum of the market is bullish. So this is why I would look for that, especially with price action being here. All right. So that's one way to look at it.
Question. I noticed that the price action and trading view, it's different from the price action in MetaTrader on my laptop. Do you find that?
Yes, that's actually legit. that you say that, because all brokers are not the same according to TradingView. The motion of the market is going to be the same, correct? But the actual price action itself is not going to be the same. So
Yeah, I'm pretty
every time I
sad to see that.
yeah, every time I take a trade based off TradingView, it doesn't align with my broker, but it still plays out the same, if that makes sense. The only trades I take is based off of what I see off of TradingView.
Right. So if your overall analysis is bullish, you just kind of, I mean, when I go into the MetaTrader, I got to look for an entry based
Right.
on my, the analysis. But yeah, I noticed today, I really didn't notice until today. I guess I've been kind of jumping in trades, but didn't really notice that it really is, it's quite different.
Right.
Like there was like a doji forming on the 4 hour, but it wasn't happening in MetaTrader.
Right.
So
Right.
it was
Right.
really just, yeah, I noticed that.
Okay.
So, okay.
Okay. I'm glad you asked that, because that is a question that a lot of people do end up having. Let me see. Another thing that ends up happening as well is it doesn't look the same all the time. And maybe the fractals as well may be a little bit off, or it depends on your platform as well, or whoever your broker is as well. So thank you for asking that question. It might have answered some other people's question. Did everybody get this strategy down, the rules for this strategy? And by the way, you only trade this strategy if it follows the criteria of everything. If you're missing anything in this strategy, you do not take the trade. Just letting you know. So let me pick on somebody just to make sure y'all are understanding. Let's see. Let's go. Let's see. Paul, if you are able to speak, uh, what are the rules for this Tinkinson breakout strategy? Tinkinson break strategy. Ooh, everybody gets silent when I call on them. Okay, Greg. Greg, what are the rules for this strategy?
All right, so we want to have a golden cross,
Yeah.
and that's where what are they called again? Is it Tinkun Sen and Kijun?
Yes. So TK cross.
Okay. And so we want the we want this red line here, the Tinkin to be above,
Right.
and we want to check if the price is above or below the cloud.
Mm-hmm.
And so that would lead me to guess that if it's above the cloud, we're bullish, and below is bearish. Is that right?
Right.
Okay. Is price above Tinkusen? Is that what that green one is called? The Tinkusen?
No, Chiku span.
Okay, Chiku span. Let me just change up my note right here, right quick. And so is price above or below Chiku span on the candle close?
When you say that, it's Chiku span above price. Yeah.
So in this instance, on your chart that you have right now, it's above price.
Yeah.
Okay. And so that's what we want to check is Chiku span above or below price.
Correct.
Okay. And then above would indicate bullish, correct?
Correct.
Great. And we want to make sure that it's like that on the candle close too.
Correct. Good. That's it.
Okay.
So
and then I'll have is something here about the ADXDI as well.
Right. And then for this, you want to make sure this is at least above the 25. As long as this is above 25, you're still bullish. As long as it's not crossing into blue, you're still bullish on this trade.
So that 25 number is kind of important when it comes to ADX.
Yes. And this is actually the ADX is the red line here. The DI is the purple and blue cloud looking things.
And this is our momentum indicator pretty much?
Yes.
All right.
Notice here when the momentum's dying here, it's underneath the 25. You see right here how market went flat. And then once it got back above the 25, look at momentum start picking up again.
Yeah, I see that.
And then the R William percent R is just like to say enter the trade. It actually might tell you to enter the trade earlier than you should, because right here it's telling you to enter the trade. As long as it's not crossing back underneath the negative 80 here, or it really should be negative 20. As long as it's not crossing underneath, you should be bullish. So you see here, you're bullish. And then back here, right here, it's saying to enter another position right here. And you could have caught the trade right there and taken it up. Or you could play it safe, wait, put an entry above that fractal, wait for that fractal breakout, take that trade to the upside. So there's different ways you could have entered in this, but I'm just saying based off if you're trading this alone, this strategy here, then this is a whole different strategy, but I'll get into that later, a little bit later.
Right.
Does everybody got that? Everybody has this. I want some yeses or nos before we move on. You
Yeah,
don't
I
have to
have
say
it.
it out loud. You could type it in the chat box if you don't want to speak, but I need some answers, like if y'all have this or not, so I can move on.
Yeah. Yeah, I got it.
Okay. Anybody else? Anybody else? Y'all quiet today. Y'all.
So quick question, what are the or maybe you're going to get into this regarding the take profits, and so do you think it's going to keep going up, or do you think we might see it reversing? I mean, obviously now it's looking, the analysis, it's going to go up.
Right.
So what are your take profit
Okay,
areas?
take profit. Okay, so this take profit, this is going to be interesting. Take profit is based off me. I base my take profit levels off the wave theory. So how I would look for take profits, let me show you here. For this example, and there's different ways, but for 2 examples, I'll give you 2 examples. First one, I do this, the Fibonacci extensions. This is like pretty much the only Fibonacci tool I ever use besides the wave, besides the time Fibonacci. This I look for the in-wave structure. So from this low to this high, down to this low, which will give me my targets. Now the other way, this is just the measured move here. Now the other way I look for take profits is based off price action. Once price starts going, for instance, even if price, like say price is going up, right? One way I will look to take profit. So they'll say if I got in right here, okay, let me actually do this. Say I got in right here. Your take profit could be at this point. The reason why is because price crossed below Tinkerson at this point. This is a way that I look at taking how to take profit as well. Even though market can still potentially go up, this is still an area where you could TP the market because it crossed beneath the Tinkerson here. You don't want it to cross underneath the Kijun all the time because look, if you got in here and you get out right here, you didn't really make too much profit. So that's another way I could look to get out of the market. So if the price crosses the Tinkerson, that's a way to exit the market as well.
That's when you got hit, it hits your stop loss.
Yeah, that's why I hit my stop loss. And it's better to be safe than sorry because, you know, if you are up quite a bit and then you say if it, let's say if it did drop underneath here, I would be, you know, pretty sad. Another way to gauge it, you could get out based off price action. You saw this was a bearish engulfing candle. You could get out of the market as soon as you saw this candle close. So there's different ways. Another way to take profit, let's say I got in here again. I usually put my stop loss 2 candles behind the high. So let's say at this point was the high, correct? So my stop loss would be either here, which if I had it here, I would still be in the trade right now. But I put it a little closer because I saw the market is kind of slowing down right here. So look here. Oh, well, this is right there. That would have hit me out. Had I put it here, actually, I would have still been knocked out right there. So that means there's stop loss hunting right there. Because people are probably looking to take profit, you know, right here anyway. Because if you look at the higher time frame, this is a resistance area. So I think everybody's playing it safe right here and looking to take some profits off the table. That's why the momentum's starting to slow down here. If this candle turns into a fractal, you might want to be careful here because what might happen, this may be the high, this may be the low, and the market may start ranging in here before it takes off either to the upside or downside. So you have to watch and see what happens here. That's only if this candle turns into a fractal, which I believe it will. So that's something to be mindful of. All right. Let me see. All right. So questions, are we good to move on?
I'm
And so
good.
you're managing your trade on the 1 hour.
Yes.
You're
Well,
entering and managing it on the same time frame.
yes. Usually I manage the trade on the same time frame I enter. Like if I was trading the daily chart, I actually wouldn't even be out of the trade right now, honestly. But if I was trading the daily time frame, the entry, let's say if I entered right here, because that was a fractal breakout, that was the trade from yesterday. All right, or yeah, about yesterday or so, or not yesterday. I said yesterday. The like the few days that I had called that move from this point. The other part is if I was here, if I had entered in here, I definitely would be looking to get out of the trade because look where Tinkerson and Kijun are. All right. So I'm still looking for the market moving higher just based off the daily. So if I was entering on the daily, I would not even think about exiting this trade yet. Now, the 4 hour, if I had entered in on the 4 hour, let's say I entered actually like right here. This was where I said to the breakout happened yesterday. You should have been in the trade right here yesterday. And then the market went up. So if you're monitoring the trade off the 4 hour, you're still in this trade based off the 4 hour time frame because of this here. It has not broken underneath the Tinkinson on the 4 hour time frame. Even though it's looking like it may want to pull back the Tinkinson, if it breaks beneath here, then that's fine. That means we might have the chance to catch a bigger S wave off the 4 hour chart and go higher. So I think we're in for maybe a correction. Just from looking at what the market's trying to do currently, and the 4 hour candle's about to close in the next 28 minutes, and it's printing a long-legged doji. So we may want to look to see the market go down. Now, what may also happen if you see Kijun go flat, which may end up happening in the next 28 minutes if we can't pull higher. If this goes flat, this may signify to start taking out profits too. You also have to remember this market. Ichimoku will signal you to take out profit or to start looking to take your trade out. So let's say I got in right here. Let's say if this Kijun goes flat, I will take my profits once I see that. Because look here, all right. So first example, the S wave from down here. Since I caught that first one here, this is where you could have first taken your profits at right here. Let me rewind it. About right there. So you see, say this was your entry. You see how Kijun went flat right here, Miss Jacqueline?
Yep, I see it.
Yeah, this is telling you could take your profits out right there.
Okay.
As soon as you see that go flat, take your profit and be good. Now you want to catch everybody wants to catch the full trend, right? But that's not always the case. That's why I say it depends on what time frame you're trading. You're going to be trading differently. So if you had entered here, exited right there, you still made 4,647 pips right there. So you're still good. So like I said, your rules is based off what time frame you trade. All right. So far, it looks like this is not going to go in our favor, so I might have to change that. It's still price action. As long as it's above the Tinkinson, we're still good, but we'll see. But everybody has this strategy down. I just need to make sure because I'm about to move on.
I'm with it.
All right, sweet.
Yeah, they're
Awesome. And this one's recorded, so y'all could go back to this. This is gonna be a pretty good one to come back to. So that's strategy number one. Strategy two, the most basic Ichimoku strategy is the Kumo breakout. So let me see if I can find a good one here. All right, here's one. Let me take this off. This applies for any time frame, but I like to trade it on the higher time frames just because the quality will be a little bit better. So let me see here. All right, let's go back to this point so we could go into detail on this trade. This is where the breakout happened. It happened here too, but I'm explaining why this wouldn't have been as strong of a breakout right here at this point. Because you're saying, okay, we could have gotten in the trade here, but there's a reason why we would have got it in right here, and I'm gonna show you. All right. So the rules for this one, pretty much this, this is how Ichimoku's run. But the first rule for this one is a golden cross. That's going to always be the first thing that you look for. Do we have a golden cross? Yes. Perfect. Next thing you're going to look at, do we have a breakout? Yes, we do. Perfect. The last thing, there's only 3 confirmations you need for this particular trade. The last one is Chiku span is above price. So these are your 3 confirmations to take this trade. Now, if you want to put on a 4th confirmation, the last one you could do is, are we forming a bullish cloud? Yes. All right. So you could add that, but you don't need that one. That's just like extra, precaution there. Now, let me show you why this one's not valid. All right. Excuse me. So if we rewind this, let's go back right here. You see, if you measure back in time, you could see that the Chiku span is above price here, right? So that's also letting us know that we are good right there. Let's go back on this candle right here. Let's go. Let's do this about right here. Okay, so this one is actually still above. So at this point, you could have taken that. So looking at this right here, but the thing that I see, let me actually rewind real quick. Let me see if there was a golden cross at that point. To right here. So we had a golden cross there. Yes. Chiku span, price broke above the cloud. Yes. And Chiku span was there. So yeah, you could have actually put in a buy right there. Actually, now that I'm looking at it. So this was just a failed attempt right here. So then remember how I was telling you about the 4th confirmation? You could add that 4th one. We don't have a golden no, we don't have a Kumo twist bullish yet. So that is something that you could add to this, but usually you just could stick with 3 confirmations for this one. Now, if you want to make this trade stronger, let's look at the trend. So we are bullish. The momentum is bullish here, so that is a good sign. Broke underneath right there. So this was still a valid trade. Let's see. And you could still, yeah. So you see here, if you're using the ADX, you could add this into the mix. The ADX DI is above the 25. And you got your buy signal with the William % right there. So yeah, you could actually buy it in here. Now, if we go back, you could have still bought in here at the same time here, but I guess what ended up happening, you're just going to have to use good risk management and just hold out on this trade. So this was still a good win. Your stop loss for this one, let's say you did enter early, I'll show you how you could possibly manage this trade. So if you entered here, usually how you want to enter in the trade, you want to wait till it breaks that high right there. So let's do that. Let's do that. Stop loss. Let's see. Let's make that red. Stop loss could have been right here. And they do say, a way that you could find your stop loss. You see where this crossed at right here on the ADX DI. If it crossed right here, that's where your stop loss is going to be on the chart. So it'll be at this fractal low, but that's too low for my taste. So I usually put it underneath the second candle. So one, count back, 1, 2 is going underneath that candle and maybe a slightly lower. All right, so let's see, play it. We're still in the trade. So this is how you could find a better position on this trade. All right. Big thing. If you see that price did not trigger you in right here, you could walk down this trade. And not only are you minimizing your stop loss, because you went from up here to down here now. So now you're tightening up your stop loss, putting a buy stop in the half of that candle and let the market trigger you in. All right, let's see. Now you're triggered right there. Now you're in profit. And this is still above. Let's watch it. And it takes off. So you could have been holding that trade and you shortened your stop loss. So that was a good win right there. So this is the Kumo breakout strategy right here. So let me go back just to make sure y'all understand. When the thing that you do need to have here, that golden cross, the breakout of price, Chiku span above price. All right, well, actually, no, that's not the one. It's actually right over here. This right here. All right. So this needs to, Chiku span needs to be above price. It cannot be inside price. All right. If it's inside price, then you don't want to take that. But right here, it's saying we're good. So you could have got in early anyway, right there, and just made sure your risk management was good and your stop loss was good as well. And then you could have still won that trade. Any questions? Questions, concerns, comments?
I'm following.
All right. Let's see. Let me pick on someone real quick. Actually, Bert, pick somebody. Pick somebody to pick on, Mr. Bert. I'll let you.
Yes, sir.
Yeah, pick somebody.
Let me look through these names.
Yeah, go ahead. Look through the names. I'll give you teacher power today.
Oh, thank you. You know what? I haven't heard from Mr. Hernandez, Greg.
Oh no, he actually was the one that said the last one.
Oh, okay. Well, what about Brandon?
Okay, let's see. Brandon, you're up, my friend.
What's on there?
All right. So, what are the 3 rules for this strategy?
You want to have a golden cross,
Right.
You want to have a breakout above the cloud, and you want the Chico span to be above the price.
Perfect. He got an A+, y'all. Y'all give him a round of applause. Nice job, man. Those are the only 3 rules you need for that strategy. All right. Let's see. Bert, pick on the next person for me to pick on when I explain the next one. Or no. Not okay. No. Brandon, pick on the next person. Bert, you have done your job. Brandon, pick on the next person.
Yes,
look at everybody in the participants and pick on the next person.
Can I ask a quick question before he picks the next person?
Yeah, go ahead.
So when we're looking for price to break out above the fractal?
Not necessarily. It doesn't need to break above the fractal. I'm just telling you without. I'm explaining this without the fractals.
Oh, okay.
You don't need to always trade fractals. Fractals do help, but this is without the fractals. It's like getting in based off price action only, not fractals, just price action.
Okay.
Ichimoku is effective with price action, so you could trade it like that. But go ahead, Brandon, pick someone.
I'll go Jade.
Jade, you are next for the next one. So after I explain the next one, you gotta explain what I'm talking about. So the next strategy, this is a must strategy. This is a strategy that you need to really get down in your arsenal because this is one of the more effective strategies. If I could find an example, let's see, 4 hour. All right, here we go. Ooh, ooh, nope, nope. Let's rewind that. Pum, right there. The Kijun bounce strategy. Most simple strategy there is. This one is honestly one of my go-tos. And then the last one I'm gonna show y'all is gonna be one of the more stronger trade opportunities to take. But anyway, let's go with this one. So with this strategy, this is the Kijun bounce strategy. You're looking, first thing you're looking for, a golden cross. Even if the golden cross is way down here, this is still valid because these two have never crossed again. If these two have crossed again, this will be invalid. All right. So you still have a golden cross that happened from this point to this point. This is still valid to take the trade. All right. So as long as these two have a cross, you're still looking for bullish opportunities. So first things first, golden cross. Yes. One, we got it. Price is above the cloud. Yes. Two, we got it. Price is at the Kijun and Chiku span is above price. So we got those. So this is, you don't need to write this one. This is the third one. The fourth thing that you're looking for is price action. All right. The rules for taking any trades, and I need y'all to write these three things down. To even take any type of trade at all, you need first a level, a signal, and a trigger. So LST. All right. Miss Jade, what is LST? I'll be picking on you, Jade. You got to know this. I got to make sure you got this to the T.
A level, signal, and trigger.
Correct. So what are levels? Okay, these are what levels are. So a level could be a fractal level. A level could be a Tinkinson level. A level could be a Kijun level, or a level could be a cloud level. So there's different levels where you could take trades. If you have a level, you're looking for your signal, which will be price action. The trigger is you taking that trade. All right. The trigger will be you putting that stop, sell stop, or buy stop, sell limit, buy limit, or whatever that trade opportunity is. So for example, here, your first level, you would have known this one. This one could have been a good trade if you had been trading counter trend trading, but for this example, you're not going to do that. So say you see the market coming down and you're saying, okay, the first level that we're going to be eyeing is the Tinkinson. All right, cool. It broke there. The next level was the Kijun. It never broke Kijun. So this is where you're looking for your trade here to go to the upside. All right. This is called the Kijun bounce. You have your 4 confirmations here because you have this price action candle, this long-legged doji. So you could put your, and I can move this over, your entry right there. Okay. Stop loss, you usually want to keep it right underneath the Kijun. Because if price breaks the Kijun, then this market's going to the opposite direction. Notice every time market does break Kijun, it usually trends down much lower after it breaks Kijun. This is the most important level in Ichimoku. This is where you're going to get one of your bigger trades at too. All right. Besides the S wave. All right. So here, this is strategy number 3, the Kijun bounce. Let me actually play this. It's got too much stuff on this screen. So here, so we're still not in the trade. Still not in the trade. Still not in the trade yet. Now we're in the trade right there.
This the consolidation? Okay.
Yes. And actually, I'm going to show y'all an even cleaner method how to get in here, so you could get in a little bit earlier than this. All right, so let me go ahead and take that off. This is this is something I don't teach too often, but it's very effective anyway. I actually used it yesterday for the trade. So here, y'all see this ugly consolidation? You usually want to stay out of that. So you can put you could box the market just like that. Let me show y'all something slick here. All right, about right there. So look at the William percent R. Okay, let's do this. William percent R. If you see that the momentum, you probably could have caught this on the 1 hour. Actually, now I'm looking at it. But this is what you're doing. Once you see that this crossed above how it broke out this consolidation here, you could have put your entry right above here, right above this level. Yeah, you would have had to catch this a little cleaner on the 1 hour. But when you see this, what you're looking for is William percent R to cross above the negative 20 level here. All right, so once it crossed there, this is letting you know consolidation is going to be breaking. This was a good move to the upside, so really your entry probably be literally be right there. Let me see what this looked like on the 1 hour chart real quick. So I see here, yeah, you would have got in a little bit earlier, like right there, based off the 1 hour chart. So after that trade, let's watch it, and you're off. So you got in a little bit earlier, and then the market took off. So had you used that, let me see, that right there, had you got in at the very tippy top, you would have made it out with 5,452 pips. But if you got out right there when the Kijun was going flat a little bit, 41,300 41,000, I said 41,000, 4,132, my bad. So yeah, right there, that's where you would have taken your profit there if you wanted to. Now you notice here Kijun's angling up again, so this is probably signifying the next leg to go up. So let's go ahead. And also let's go back real quick. Just real quick. About right. Oh man, no, about right here. Same thing, same exact thing. Look here. Same strategy that we used back right here. Look at this consolidation. Look at when the William percent R crossed above right there. You should be entering on that candle right there. As soon as it crossed above, you should put a buy entry right there, and then boom. You should be in profit there. But now let's look at the current market, and this is where we're at now. All right, so we have some fight in this market still, so we're going to see what's going to happen here. All right. But I'm showing you just basic strategies that you could use. There's so many strategies you could use to get in the market. This is the consolidation one. Consolidation one you could use at honestly, really any level, because this one happened at the Tinkinson. This happened in between Tinkinson and Kijun. So this is still considered a Kijun bounce. If it's between the Tinkinson and the Kijunson, this is still considered a Tinkinson bounce. All right. And really, you could still be holding this trade because look, we never had a bearish cross yet. Look here, should still be in this trade, honestly, from this point, because we never had a bearish cross yet. So once these two cross, that's going to tell you, okay, now you could close all your positions and get out. Now, let's say if there was a flash crash, you're not going to see that coming. So most likely you won't see the TK crossover until too late, because a flash crash will make these two do something like this. Let me do that tool. Let me highlight this red so you could get the better. So let's say a flash crash happened. This is more likely what it would look like here. Something like that. Something to think about, but sometimes you get those without warning. You just never see them coming. It's just nice to be aware of those things. All right, so Miss Jade, let me go over this one more time, and I'm gonna ask you the rules for this trade. All right, so coming back down here, what you need for this trade setup, you need a golden cross, price above the cloud, Chiku span above price, and you need to be at the Kijinsen level here for and look for price action. All right. So again, Miss J, repeat those back to me. What do you need to take this trade?
Okay. You need the golden cross,
Yes.
price action, price at the Kijinsen, and price above. You need the, what is this right here? What is that outside? What's that like green line right there? Out there?
Chiku
Yeah,
span.
right there.
Yeah, Chiku
Chiku span outside of the price,
above price.
above price.
So
Did I already say that?
okay, you said yeah, you just said it. Okay, so say it in the correct order because the reason why you need to have it in this order is because it's gonna make the trade stronger. Okay, so what's the very
So the first one
thing?
is golden cross.
Yes. Second thing.
Then the second one is price above the you say order. I don't know about the order. All right, so price above, well, I guess this Kijinsen is outside of the, is that the second one? Is that number 2?
No.
The line out in the line out.
Remember
Okay.
the cloud. What's the price has to do with the cloud? So you got the golden cross. What about the cloud itself? Price has to be what?
Price has to be above the cloud.
Yes, so that's number 2.
But that's why I got number 2. Oh, I forgot it. All right, price has to be above the cloud, and price has to be at the Kijinsen.
And then
Price action.
Well, you're looking for price action at Kijin, but the last thing, what's number 4?
Hello, my name is Rob. I'm returning a phone call.
I don't know number. The number 4 is the one I was talking with the line. Then that's the number 4.
This one here.
Yes.
All right, cool. So yes, those are the 4 rules that you need. Perfect. If you stick with those rules, you'll have a trade there. Make sure you watch that price action though. Okay, perfect, Jade. Miss Jade, call on somebody. Who you want next for this next one? Go ahead and look at the participants.
P iPad or something?
Yeah, he's gone.
That's me.
Now you're here.
Yeah, sorry, I didn't change it.
Got you.
Hey, this is Paul.
All right, Paul. Cool. You're gonna do the next one after I finish explaining it. This one is a little bit more challenging, so bear with me because this one is without Ichimoku. You could trade it with the Ichimoku and without it. It's just based off what you want to see or what you want to do. So let me go ahead and pick another one. Let me see if I can find an example on another chart. Let's see. Actually, there is a good one here. Yep, here it is. Found it already. This one was a little tricky, but it's there. Okay. So I'm going to start teaching y'all the wave theory because this is going to get y'all some really good trades. And it's going to be probably the most confusing thing for y'all in the beginning. Honestly, it's one of the really most confusing things in Ichimoku once you start learning it. But it's one of the most powerful things once you start learning it. So let's go ahead and touch on it. So Paul, I'm sorry you have to be the one to do this one, but
I'm glad.
it's all good. You'll learn. So when it comes to the wave theory, let me draw out the types of waves there are. I'm just gonna go over 2 today. So actually, I'll pretty much go over a little bit of them, all of them. But so you have your S wave. Actually, I'm gonna actually end with that one because that's actually more advanced. You have your I wave. You have your V wave. You have your N wave. Then you have your Y wave. It does not look like a Y. I'll show you what it looks like because this one's actually the most confusing. And then you have your S wave. So this is from easiest to hardest. Honestly, these two are actually interchangeable, but I honestly think the Y wave is a little harder just because S waves are a little bit more easier to follow or find than a Y wave. So your I wave is from fractal to fractal pretty much. Doesn't matter the length from here to here. Your V wave is from this leg to the next fractal leg here. So this one here, this is a V wave. V waves do not always have to make like the perfect V. All right. So get that already out your head if you're thinking that. A V wave could go from here to here. This is still a V wave. Don't ask me why. That's just how the Japanese look at it. That's how they look at it. Japanese traders look at that. So the other thing, the N wave, right? So it's a I wave plus a V wave plus another I wave. All right. And the I wave usually equals the next I wave here. So A, B, C, D. So A and B equal the length or could get close to the amount of C, D. But that's when I'll go into more detail on that in a bit. So AB equals CD and ABC equals is a what? A V wave. So A to B to C is a V wave. B to C to D is another V wave. So this was A to B to C is a correction. B, C, D is an impulse. Any questions on that so far? Notice how A to B is the bullish movement. B to C is the correction. So ABC is a correction V wave. BCD is a impulse V wave. But if you look at it, the whole picture, this is a S. This is a N wave. All right, you see that? Everybody see that?
Okay.
Now here's the next part because this is tricky. This is how you find the S wave. So you have to zoom out when you are looking to trade an S wave. You have to zoom out on your chart. Notice how these fractal levels tell you where the market's going. All right. So from this point, I'm actually use this tool from this point down. So here to here is the I wave. Then you get a high right there. You break this fractal. Notice how when you're looking for the S wave, it has to break that fractal here. So there. And what happens is going to return back to this fractal level. Even if it comes a little lower, this is still an S wave right here. And also, this is called a fractal bounce trade. Right there, right there. So in this zone, you're looking for the market to bounce off this zone, this fractal zone, and go higher. These are one of your more powerful trading opportunities because these S waves turn into N waves. All right. But finding out the structure of the market, it lets you know if it holds as support, you may want to take that trade. All right. So let's see. Had you taken this one on Bitcoin at the highest point, that's a lot of pips there. 3,687 pips for that trade. All right. But this is the S wave right here. This is a little bit more advanced. How to spot it is based off the fractal. All right. And they happen actually quite often. If you catch a few of these, you can make a lot of profit. Because usually what happens when the market's in a strong trend, they make at least 2 to 3 S waves. And they're usually something like this, right? There is a small one in here too, so it's not as big, but it's not as obvious as this one. But when you're trading the S wave, you need to zoom out. All right. So when you're trading this, the only thing that you're looking for is price action. You have your level. So let me go ahead and do the LST. Where is that tool at? Here it is. So LST, once again, you have your level. Your signal here was that hammer, and your trigger, you put in that trade for the buy once it triggers your entry. All right. So you have the opportunity to take something like this and make major profit. It's just, do you have the psychology to wait this trade out? Do you believe that this level is going to hold as support? Even though it gave you an S wave here, it doesn't always mean it's going to work in your favor, because this could easily go down like that and make a V wave coming this way. So as long as you understand that the markets are consistently making waves, you could always make good trades. So let me show you an example over here, how you can look at this market. Market made a I wave. They made a V wave. Then right here, you have another wave. This could be a small N wave. And it's just moving in waves. This is all the market's doing. You're making, and from here to here, this is a V wave. And depending on how you look at it too, from this point to this point is a V wave. Here, 1, 2, 3, V wave. So the market's doing this consistently. You're just determining if it's going to be a V wave, I wave, N wave, S wave, or Y wave. Y wave, I'll have to look for one. They're not actually easy to spot, but they are rewarding if you do catch one. It's just they don't happen often in the market. It's just nice to know what they look like. So I'll draw what they look like. Let me draw one out. So if you do identify one, it's usually where the market is making higher highs while making lower lows. So it looks literally like an alligator mouth. The market is doing something like this. This is called a Y wave. After an impulsive move here, it'll do that. What's up?
I was just gonna let you know that it's already triggered.
XRP?
XRP is already triggered. Yeah, it triggered in.
Hold on a second. Let me see.
Ooh.
Oh yeah,
Dang.
you're right. Yeah, you're right. Let me go look at this real quick. Paul, you're still on the hook.
Yeah, I'm watching it. I've been looking down, taking notes, and I see we're trying to get to 186.
Actually, you know what? This is actually a time where you could actually enter this trade now. Make sure if you do enter this, you use really tight. You're really tight on your risk management. Not so much the stop loss, but make sure your risk management is good. So yeah, you could actually enter this trade right now if you want to. And actually, I'm actually gonna do that myself. I'm gonna put a small position in. Actually, I put a 0.5 on this one. All right. So trade is now in. Okay. I'm actually gonna open up MT4 to monitor this on the computer. Okay. And good call, Bert. Oh, did Bert disappear? Oh no, Bert's there. Okay. Okay. Cool, cool. So yeah, this is actually a good opportunity to look at that Tinkinson breakout. Actually, this one's working out really well. Buy stop and sell, stop loss there. So yeah, if you're taking this trade, this is actually not bad to take right now. Since we did enter a little bit later than we oughta, let me see real quick. I'm trying to look at the You could put your stop loss. Yeah, you could put your stop loss at the Tinkinson level just to play it safe there. You don't want to overdo it because we did get in a little too late. So you could also put it at the halfway point of the previous candle or at that fractal. But I still think this is going to be a good trade off. So I'm not worried about it. But
What?
Say
Sorry,
again?
what's the level that you have it at? Sorry, because I'm not in front of my the
Okay, so
MetaTrader.
no, I'm talking about market execution right now. So whatever.
No, the stop loss. Where's your
stop
stop
loss
loss
is at
at?
the 1 hour Tinkinson.
Sorry, what number do you have? I just so I can
For
gauge it.
me personally, my stop loss would be at $1.76, 899. Exactly.
Okay. All right.
All right, perfect. All right, good, Bert. And this is the example of the Tinkinson breakout. So if y'all want to use this strategy, this is one of the 4 strategies that I use. If I don't see this, I ain't touching it. If I don't have any strategy, so let's say if I'm looking for a trading opportunity, and this is for, you could use these same 4 strategies on stocks, crypto, forex. You could use it on any financial market. They work. The thing is, will they always win? No, but will the probability be higher for you? Yes. All right. Just make sure you're using good risk management and that you're using, a decent stop loss for your trade. And try to not get out, try not to miss the trade, because sometimes we miss trades. So set alerts. I should have actually put an alert right there, but I was not expecting it to do that. But still should have done that anyway. But as time goes on, when you look at this market, uh, and this is actually going to be interesting. Now that I'm looking at this double fractal here. So this is what I'm going to do. Since I see a double fractal, this is what I'm going to do automatically. I'm actually going to be watching this even harder now because market may end up doing this. Ranging. Yeah. If you ever see double fractals, that's a sign that market may start ranging. So be cautious of those.
But you know what?
Yeah.
I was gonna say, if you look back at the last time it rains, it does that when it's getting ready, when it's building momentum to blast off again, just like it did right there.
Yeah.
Because see, if you look and then go back down to the next level, right there again. Yeah, I'm noticing that every time it's getting ready to blast off, it rains for at least about a day or two.
Let me zoom out because there might actually be a channel here. Let me actually move this over. Yeah, when you zoom out, you see the whole thing. So let's see if there's a channel here. Let's see, bam. Yeah, that's kind of forced, but there is a channel there.
Yeah.
Yeah, there is a channel there. So I could actually dig this. So if I take off Ichimoku, you can see a little bit more clearly. So yeah, oh man, ooh. Hopefully it ranges to where it breaks out of this channel, because if this does not hold, it's actually gonna fall back down to here, then take off. So we may look for a buying opportunity here as well. Just zooming out and seeing the bigger picture. But hopefully it does what you said, range and then takes off here, because that's actually a better opportunity right there. If it does fall down here, that's a better opportunity. But here is fine as well. We'll take it. Right now, we're just going based off the momentum of what the market's giving us right now. So I'm confident that it could pull through. I just need to see if buyers are going to take over right here, because I don't want to see it range in here, especially that double fractal. That's not a good. That's the only reason why I'm like, this could go really any way at this point now. But I'm still gonna hold on to that trade just because the rules is there. Might as well. And even if it doesn't, there's still a S wave opportunity anyway if it does do that. So let me show you. So this would be it. coming down to this point, then take off. This is where you would look for your trade. S wave, actually right in here. So we'll see what happens. We don't know yet. We're just trying to see what the market's going to do, especially since this is new. This is it's not new territory, but we haven't been here in a long time for XRP. So last time we were even at these prices for XRP was back here. Currently, that was January 2018. So we don't know how prices are gonna respond here.
I got a question.
Yeah.
I know XRP isn't listed on Coinbase, but do you think the IPO could affect you think the IPO could cause a pump or anything like that?
I believe it can. The only thing I think cryptos will definitely, pump, especially if people are buying Bitcoin, because Bitcoin drives most of the market anyway. I think, let me look this up real quick. Let's see. Let me look at this. Yeah, if y'all need to see this is called coin360.com. I don't know why it's taking so long to load up. There we go. So Bitcoin dominance has fell. Actually, wow, that's actually pretty low. This is actually the lowest Bitcoin dominance has been in a long time. So 54% dominance right now. But Bitcoin has been green, so this should drive the markets up quite a bit. XRP, wow, 32%. Ethereum, 6.85%. But yeah, this is letting you know that Bitcoin dominance is starting to slow down, only because it's been ranging for the last couple weeks, honestly. So we'll see how this actually performs in the next few days. I think Coinbase being an IPO will affect it, and I do think the IPO will cause the market to move higher. That's just my opinion. I could be wrong, but that's just my opinion on the matter. Will it happen? It could. And if it does, I'm gladly take it. Gladly.
When's Coinbase scheduled to go to get on the
IPO
index?
Yeah. Tomorrow. Between tomorrow and the 16th, I think.
Yeah, I mean that's gonna cause. I've heard several people say that's gonna cause all cryptos to pretty much hopscotch.
Right.
And go, especially if it's on on Coinbase.
Right.
Yeah. Well, wow. Well, I guess I need to go buy me a new car.
Hey, I don't blame you. Do it.
Hey, I gotta get out of here, man. I got class coming up.
All right, that's cool, man. I appreciate you for being on. God bless, bro.
God bless. Much love, man. Talk to you later.
Talk to you later.
Obama's Jacqueline, I ain't said nothing to you today. Have a good one.
Hey, good to hear your voice today. Take care.
Take care.
All right. So now let's do this. Okay, so last thing, Paul, I'm still debating if I should pick on you for this one, because this is more advanced, this strategy, but it'll help you to understand market structure as well. So let me go over this first S wave here. Okay, maybe this might help you a little bit. This was actually the cleanest S wave I've seen. But anyway, right here, what you want to identify is the fractal levels. All right, zoom out, see where price is coming back to. Because remember, you have to have a level. Our level is this fractal level. So level here. So actually, let me put an L here. Actually, let me just do this. First thing you're looking for is this one. Then this is your level. So it's coming down to this fractal level. The only thing that you're going to do, what you're going to do, you're going to box this market just like this. So how you going to box this? This is how I box this. You put it at that wick high. So actually I need to put it a little bit lower. This wick high and this candle close. And this is a bullish opportunity. So that candle close. This is how I mark the zone for this. Okay. So as long as it's on this zone, if it's above this zone, you're still good here. You're still good here. So we have that. Now the next thing I'm looking at is seeing, do we have price action? So I need to do this again. So let me clear that. So here, one level. The next thing is your trigger, no signal, which is your price action right here. So you could put your entry right above that, not high, that fractal high, but above that candle high on that purple candle. Let me go back. So this is what I'll do instead. Put the entry right there. So you put your entry there. Once you have that price action, that's your entry. You can wait for the market to trigger you in, or you could try to find a lower price on the lower time frame, or you could just march it down with you. So this was it. You see how it kind of went lower there? You could have put it right here, but negative a little bit and then taken off right there. So there's different ways you're going to come in here. Just for now, focus more on the breaking of that high point. Once it breaks that high point, take that trade. Stop loss will be underneath that zone. So it's stop loss right here underneath that zone. So you're only looking for really three things. So you're looking for one, that fractal level coming down to this zone. So this is your level, your signal, price action, trigger is your entry, your buy stop. So trigger, and that's it. So 1, 2, and really that's really it. You don't need to, honestly, you just really need 2 things for this strategy, 2 confirmations, and that's it. But you do need a level and a signal before you take it, and price cannot break underneath here. Now, if you want to make it stronger, this S-wave stronger, use Ichimoku and do this.
Yeah, you can turn on. You can, it's on Hulu.
Ooh, Jay talking in the middle class.
Oh, sorry.
So what you want to do to make this trade opportunity even stronger, this is your rules for if you're trading the S-wave with Ichimoku. These are the rules that I want you to follow. So golden cross, always number 1. Came back to the fractal 2. And then the next thing you're going to see is price above. Actually, oops. Yeah, no, that's actually fine. And then the next thing you want to see is price above the cloud 3. Prices above the cloud. Last thing you're looking for is price action. So 4 right there. So 1, golden cross. 2, did it come back to that fractal level? 3 is price above the, honestly, I should actually make this number 2 for the rules. So yeah, I'm gonna actually do that. Let me come back. So this is 2, 3, and then 4. So 1, golden cross. 2, prices above the cloud. 3, it came back to this fractal level. And then 4, it's you get your price action. Only thing you're looking for is price action. All right. Let me see. I have a question in the chat. Okay. All right, Brandon. Take it easy, man. Okay, so do we have an understanding what's going on here? Okay, so let me ask you, Paul.
Yep.
I know this is a little tough one, but what are the rules for this strategy? The S wave, catching the S wave.
Okay, the rules for the S-wave strategy. Number 1 is golden cross.
Right.
All right. And number 2 would be price is above the cloud.
Yes.
3 is the price comes back to the fractal,
right here.
but not breaking it, right?
Not break. It could break a little bit as long as it doesn't go too far beneath it. Like you see, it did break right here, but it didn't really close underneath there too much. All right, so you could get that, which is fine. It can't be like a deep break to the downside. Now, if it was like, say, down in here, let me show you an example. Like, say if this fell down in here somewhere, that's totally invalid. Now, if it wicked, then it's still valid. If it's a wick, then it's still valid because this is support. But right here is it's still good. All right, so it really can't close underneath this fractal. So yeah, keep with that. And lastly,
Price action, candles.
right. So that's really the four things that you need to take this opportunity. And you see how effective this S wave was here.
Yeah.
This is the first S wave I called. I think actually, let me see. Last week, yeah, this was the S wave I called last week. If you go to the trading section, you'll see the trade setup section. Scroll up a little bit, you'll see this setup here. I didn't know it was gonna be this strong, but it was strong. The next S wave, there was another one that was here. I think it was on the lower time frame. I was wanting one to be right here. I was looking for one here, but we didn't get that. And you see it went up higher. But there was another one. I think it was on the smaller chart. Let me make sure I'm not crazy. This is the first one. Nope, wait, never mind. I guess it wasn't on this one. It was on something else that I saw. Well, that's out the picture. But anyway, those are the four rules that you would take for the S wave strategy or the taking the S wave trade. Honestly, you don't need Ichimoku for it. It just helps because you have a visual on the support, and then you have rules to confirm the momentum of the market. Like trading pure price action, it's helpful. It could go well, but if you want to gauge the momentum of the market, it's best to have an indicator on, especially one that's a trend-based system or one of these two to help you gauge the momentum. All right. Any questions on any of the strategies today? Any questions? Feel free to ask anything right now because that's about it for today.
No question. Thank you. Appreciate that. I'm gonna use one of the strategies and just try to master it better than trying to do all four of them.
Awesome. When you use it, practice them on demo first so you get acquainted with them. And now if you want to be a rebel and just practice it live, then you're more than welcome to. I'm not going to tell you how to trade your own money. I don't do that. That's your money. You do with what you want to do with your money. That's your money. But at the end of the day, I suggest that you kind of get a feel for it, practice it, get acquainted with the strategy, and once you get good at it, make it your best friend. All right. But these are the four strategies that are a must-have in your arsenal. All right.
For sure.
All right.
But definitely though, the buy stop that you placed earlier it wasn't really a real place, but you did say something about it earlier when we was on the trade, but it definitely hit it. I feel like, right? Or was that on the hour?
Yeah, this is it was on the hour. Yes, the 1 hour right there. So this is still valid right now. As long as we don't hit stop loss, honestly, the stop loss should, by Ichimoku rules, stop loss should be right here. But I ain't trying to give the market that much money, especially
as far as when it comes down.
Yeah. So you could.
So that's what I was about to say. Could I jump in there where you see your green line? Because that's what you put the buy limit at earlier, and I was just.
Yes, you could do that. That's fine. You got.
And then you see how it's two fractals. You got a fractal at the top and you got a fractal at the bottom. What's this? An hour or 4 hour?
This is the 1 hour.
1 hour. What is that called again?
The fractal.
There's one fractal at the top and there's one fractal at the bottom.
Yeah, it's just a fractal. Like this.
Oh, it doesn't really mean nothing.
No, this. Okay, so fractals form. Okay, so fractals form on five candles. So if these two candles are equal to the candles to the side here, then you're gonna get two fractals at the top and the bottom. Now, if this one was slightly lower, like if say this one was lower and this was high and this was low, then you only get one fractal here at the top. But in this case, we got a fractal on both sides. So this could be a ranging market. So that's why I put the stop loss a little tight. So we could range
Oh,
it here. So that's why I have this boxed
so it
up.
might not be a good time to buy. Might just let it rock.
Right. So this comes down to uh, making your own decision on the market based off what you are observing, because you do know that it is still a bullish trend. You should look for nothing but buys here. But at the same time, we are hitting a resistance, and you see here Chico Span's break hitting resistance on the trend line here. So we could also get a bounce here and then do this. That's also a possibility. This is why you have to have different approaches to the market and different scenarios, because we could easily still come down here, or we could range in here then take off again, or we could range in here and go to the downside. It's so many opportunities for different different strategies there. But for this, you're just trading your strategy that you want to trade. And that's why I said for this one, you could buy here if you want to. Just keep your stop tight. That's the thing. So trading is all based off your perspective and your what you see, not by what you feel, because you could feel a lot of things, and especially if you get attached to your trade, it might not go well, or you might get attached to your trade where it does go well. So there's different ways you could approach it. I just don't be I'm not attached to money, so I look at it as if I lost it, I could make it back. That's how I look at it.
All right. So for where did you start at in the beginning of your account?
So, oh yeah, that's
$100.
right. Let me actually send it right now so y'all can see how much I started off with. Because people don't believe me that I be flipping these small accounts.
Not that I don't believe you. It just be like, dang, you told us to use risk management. You ain't even tell us you got in that thing like 2-3 times.
No, I actually told y'all these trades. I put the setups, these same exact setups in the Discord.
Yeah, you putting the setups in with the chart. I be having questions after you put in there, because yours, you don't be like just get in at this place. You show us the chart.
Right. And I also did take some losses too, so they weren't all like wins.
True.
Hey, Cash, could I ask you, when you announced that that trade set up just a few minutes ago, I put those exact numbers in, and I thought I've done enough demos, even though I've not been successful in my demos.
Right.
So I took a chance, because I've got a $50 account that's just been sitting there. It's got real money, and so I've just it's been burning a hole, but um, so I put your numbers in, and it never even hit the stop loss, but it closed with a $28 loss. It's a little $50 account.
Right.
I did 0.02. Sorry.
Right. And that's the free margin.
Okay.
Yeah, that was based off the free margin. So when you take a trade, you notice when you put in, depending on your lot size, if you take like a 0.01, depending on your account size, it's going to take a percentage of that free margin. So if your free margin is too low, you're going to get liquidated, or in this case, you're going to get margin called by the broker. So that's what happened. You got margin called. You didn't get kicked out because you didn't hit your stop loss. You got kicked out of the trade because of margin. And I don't know what leverage you used. What leverage did you have?
I think we did 200.
Okay, yeah. So if you had put 1 in 500 leverage, you would have been able to survive that trade, because the higher the leverage, the more wiggle room you have. But you also get have a chance of losing more if it doesn't go in your favor. So maybe having that 100, that 200 leverage saved your account versus having a 1 in 500 leverage. Now, if you did 1 in 10 leverage or 1 in 50, you would have got kicked out sooner, and you would have probably had like maybe like $45 or more. Depends on, and maybe they might not even let you take the trade to begin with. So that's something to also think about.
Yeah, it didn't
So those
last.
first two trades, those.
Say again.
It kicked me out in less than a minute. I was done.
Oh yeah, so that had to do with your leverage.
Okay.
Gotcha. Jade, you said something.
So question, you had $50 account. So your first two trades, you put a 0.02 on there for both of them.
A 0.03.
And you had two trades on.
Yeah. So this is what happened. Let me go.
That's what I was trying to say. I want to do I want to have enough confidence to put. Oh, you're definitely over leveraging. I mean.
Oh yeah.
But you had the confidence enough to.
Exactly. So let me explain how I got in that trade, and that's what's down here. Okay. So when I took that trade, if you notice, one position was lower than the other. So when the first one was in profit, I put the second one in.
Okay, that's okay. Cool.
Yeah, because I didn't put them in at the same time. That's suicide. If I had them in at the same time, because okay, so the first one was a 0.02 actually. 0.02, which was at 47 cents. Actually, this trade was actually lower. Let me go back to it. 47 cents. Where are we at? 47 cents. So let me see. So I was down here, somewhere down in here when I took that trade. I'm trying to remember what the setup was for that, because I don't think it was based off the.
It wasn't nothing on no breakout, right? Was it?
No, I'm trying to figure out what I did here. Hold on a second, because it was down in here somewhere. So yeah, so it was down here. So the first position was 47.008. So somewhere down in here, I got in the trade, and that was probably on the smaller time frame that I got in on. So I was confident that the market was going to go up. When I saw that I was in profit, then I put in a second position, which was at 47.69.7. So that was up here. So about right there. And that was trading on the smaller time frame to catch the trade before it broke out. So I was trading the same rules that you see here, but on a smaller time frame. Because let me see. Let me go back to that spot now that I'm thinking about it. Let me go back about right in here. Let me go to like the hour.
Because that's really the help I'll be trying to. I mean, just trying to gauge if I should stay in the trade or if I should hold it. That's why I'll be asking questions in there. Like, okay, is you holding it? Like, if we get it now? I mean, I know we're doing our own thing, and you're not holding our hand, but
right. So let's go right about here. So let me see. So yes, this was the strategy I was trading for this one. So I remember now why I got in. So this was another strategy that I was trading. It's the C clamp strategy. I know that I have gone over this once or twice in here, but when it comes to the C clamp strategy, it's based off Kijun being flat and far away from price. So let's see about right there. So about right here, I'm looking to buy. And so whenever I got in based off of that. So there was price action right here. I got in slightly lower than that. So about right here for the first trade. Second trade got in around about right here somewhere. And that's because take profit was here and here. But if it breaks that, then you're looking for the next target. And if it breaks this level, then you're just riding it. And it did come down, and stop loss is down here, so I didn't really care. And it eventually broke. And then I had that bullish TK crossover. Not gonna trade the Kumo breakout here yet. Here, this is where you could trade the Kumo breakout. The Kumo breakout strategy. So there was different ways you could have gotten in here. But that's why I got in at this point. So that first loss that I took was stupid. That was greed. That I think that was a little greed there. The only reason why I lost this because I over leveraged, but I was still good because I said, okay, well, I took that loss because I put in a bigger lot. Because after I was in profit here, I thought I was gonna still continue up, but and also saw that the market was coming down because you see price did come down lower. It came 52 cents and then right there at 50 cents. So that's what ended up happening. Who's drawing on the screen?
I think that was me actually.
Oh, okay. All right, Greg. I'll catch you later, Greg.
But all right, cool. If I got more questions, I'm gonna wait till the market pull back and let it come to me. So
Oh yeah, of course. But yeah, I'll show you all the setups. I always give the setup for the trade. I just want to get y'all acquainted with the setup so y'all could make y'all's decision based on what you see in the market. Because as the more that you're on the charts, the more that you're learning and seeing it for yourself, you're going to be able to make those decisions on, this is what that one trade setup is. Oh, I could take that trade, or oh no, I can't take that trade because it doesn't follow these rules and guidelines. So that's how you're gonna. That's why I don't put out signals, because I want y'all to really grasp it and really to get an understanding for what you're looking at. Now I could do signals, but am I really helping you learn?
yes.
Yeah, so I do occasionally give out signals, and when I say signal, I'll just tell y'all I'm buying now or I'm selling. That's
And
my
that's
signal.
that's the signal I'm looking for.
Right. That's how
And you'll mark up
I
the
give
chart.
signals. And then you could come back, look at the chart. I'll tell you why I'm taking the trade. If it doesn't work out, it just don't work out. If it does, then it does. But I don't win all my trades. I win most of them. It's just when I do take a loss, I'm like, like really, like if you look at if I showed you all the trades out of from 50 to where it's at now, I think out of all that, since I started this account, I think I only took, let's see, let me count them. 1, 2, 3, 4, 5, 6, 7, 8, 9. I only took 9 losses out of like 20 something, or let me see how many trades I actually
That's a
took.
good average. And I started with $100.
Yeah.
So
And so that's why I get excited with this, because I'm like, you don't have to start with a lot.
that's what I'm saying.
A
But
lot.
I gotta trust myself when I get in, and I can hold it for a little minute. That's my
Right.
only thing.
Right. Now,
Yeah, but with XRP, you got to be,
yeah,
XRP
On your toes.
is pretty volatile.
very volatile.
Right.
I'll
So
say
That's what I'm saying. It's very, very volatile. I don't play with XRP.
I'll say this: the strategy that I use the most with XRP is the the Kijun bounce in the S wave. Those two have proven to work the best with XRP. The other ones are kind of hit or miss, but the S wave is good because you could catch a few S waves on XRP, and then the Kijun bounce. Those are the two I use the most on XRP.
yeah, I think that's good to know because yeah, XRP obviously has its own personality. It's very
Who you
different from
calling?
Forex. And so I spend, a lot of time in Forex. So, and I think trying to apply, you can't bring that Forex mentality to XRP. So I'm trying to really focus more on the personality of XRP just because the potential is huge.
Right.
And so, but I just want you, don't be shy with your signals. I think you're a little bit cautious because you feel like, you're responsible for other people's actions, but you're not.
Right.
So you just got to just call it as it is. It's up to everyone to be mature enough to decide whether they're going to take it or not.
Got you. And
Thanks, Jacqueline.
and Miss and Jade, you said you got to go. I appreciate you coming to class. Yeah, if you have questions, hit me up with questions. If you want to do one-on-one setup, one-on-one, so I could go into detail more, because I know that everybody is trying to really get this. I know that Ace, the greatest, Anthony and his son are doing phenomenal right now. They're killing it right now. They don't talk a lot in the group, but when they do, show up, Yeah, they're killing it.
Yeah, I think it depends on account size too, right? You really have to, but I don't know. I think there's a lot of volatility there, but
yeah,
you know what? I think I'm gonna do a one-on-one with you so I can just go over the S wave because I want to kill it too.
yeah.
And so yeah, I'll book that with you sometime this week
Right.
if that's okay. If we could just go over that.
That's perfect. Well, we could definitely set that up.
Yeah, because I'm not playing, as I told you. Not that I was before, but I really just feel this really strong pull to really, really, go the next level and start to see some profits.
Right.
So I know the Lord is just pulling up my bootstraps to really get on this
Right.
and hone in on it. So, okay.
And another thing, because I was praying for you last night. One of the things that the Lord was telling me with your trading is because this is interesting because sometimes you're fearful to pull the trigger as well. Because
yeah, I know.
Yeah, and he was telling me that you're fearful to pull the trigger.
Yep.
And it's you know what you're looking at, and that he always tells me you know what you're looking at, but you don't trust what you do. I don't know if it's because you haven't practiced it on demo enough to get comfortable with it, or you just want to, learn the strategy and trade it live immediately. That's why I always say, trade something on demo first before you start practicing with real money, because remember that psychology kicks in because you start using real money and you don't want to lose that money. That's where the Lord was showing me in you where you kind of miss, because you know what you're looking at, but the psychology of losing of that money is what kicks in.
Oh yeah. I mean, you're just confirming. I mean, I've had somebody else pray for me, and that's exactly what they said. They've been saying it for the last couple months.
So
but I feel
wow.
I am getting braver.
Right.
And because I'm telling you, the Lord there is nothing short but neon signs when I'm looking at the sign. It's like this is it. Like even the trade that you just took.
Right.
I was looking at it last night.
Mm-hmm.
I marked it out. But in my mind, it was like, I got to just talk myself out of it. And then to wake up this morning to see that and I had everything marked out. I had the zone, it was at that level, and it took off from that level.
Right.
So, but I am, I'm getting bold and fearless. So
good.
I feel like I'm getting some breakthrough in that. But you're right on target with that. You're just confirming what the Lord's been saying to me for the last 3 months.
And if somebody else said it, then I know the Lord was telling me because somebody else told you the same thing. Then I know.
But the Lord is like, no, I know He wants me to be prosper in this because of what it will do for the kingdom.
Right.
So like I know He is like pushing me to really just trust myself and do it. And that's where I'm at. I'm like, you know what? You said something key today. Your relationship with money, and I'm learning that. I think that's been the shift in me, is not to be attached to money.
Right. See, me, I'm not attached to money because I have there's this thing in my mind. If I done it once, I could do it again.
That's right.
And the Lord when I started trading, the Lord had to really make me understand that, because when I first made my first $10,000, I couldn't make $10,000 again. And I was like, I suck at trading. What's going on? And I was just very discouraged.
Yes.
So I said, you know what? Let me stop putting in so much money and start disciplining myself and start with a smaller account. Ooh, what is that? There was like a little gnat flying in my face. So it was like, I really had to, sit back and start with a small account and grow it. That's why I say practice with a small account, build your patience, your confidence, and your self-control, because with a $50 account, you're not attached to $50 like you are to like 1,000.
Right.
So I'd rather lose $50 than 1,000. Just just me. But either way, you don't want to really be losing anything. But I learned not to be attached to money, because this is the money game. When there's a winner, there's a loser in this game. But you have to minimize your losses. Don't make them big losses. and
Right.
grow your accounts according to like slowly and steady. Don't go too crazy. You might have those really good trades every now and again, but don't go too wild. Because I was really thinking about throwing a standard on this, but I said, what if it does this? I
Right.
said I'm not gonna touch a standard account until I have 6 figures in this trading account.
Right. Right.
Then I'll be more comfortable. But I said no, I'm not yet.
Well, I felt prompted to put more money in my account, but really learn to
Right.
manage my risk management.
Mm-hmm.
So we'll see. That's just kind of how I'm feeling led. Listen, it's go big or go home. Just kidding.
You had that mentality. Go big or go.
You're rubbing off on me.
Well, don't let my feelings in that rub off
Oh, no,
on you.
no.
They're not always the best.
No, it's okay. No, it's a good thing because you have to you got to learn risk management, but trading is what do they say, zero sum. Like, you're gonna lose some, you're gonna win some. Your goal is to win more than you lose.
Exactly.
So yeah. But anyway,
I feel you.
don't worry, I'll be responsible.
Oh yeah, I know you're gonna do it.
Yeah.
It's just only a matter of time, and eventually you're gonna catch one of these big trades, and you're gonna come to me and be like, "Hey," and
Yes,
your confidence is gonna go straight through the roof.
I believe so.
Because you've been pretty consistent from what I last seen.
Yeah.
You show me your trades, and you have been winning all the trades that you show me so far. So I don't know if you have taken any losses, but you haven't shown me any. But so I just assume that you won every single trade that you won so far. But
yeah, I mean, like I said, I've been consistent, especially in Forex. I've been doing okay. I've been doing pretty good there.
Right.
But you can't have it's a different mentality with XRP, and
Yes.
I really want to learn XRP because of the potential. So
right.
Yeah, and I love the strategies, especially the S wave. I think it's very I'm comfortable with that. I don't know what it is. I like the S waves. I like drawing that out with the tool and stuff like that. So as Jade said, I'll probably focus on this one on that as particularly strategy because I like it.
Right.
I feel it feels comfortable to me. Yeah.
Okay, I could get with that. That's actually not bad. You could actually catch a lot. If you catch just a few of those, you're good. Those move a lot. They work really well in Forex actually too.
I know, yeah.
Really, really well in Forex.
Exactly.
Especially like trending currencies. Yeah, like
exactly. And that's why I'm excited about it, because at least then I can apply that to both markets. So that's why I think I will just really hone in on that. But that was good. Thank you for the review today. That was very good.
Of course.
And I like the way you kind of simplified it with your LST strategy. So that's good.
Yeah, that LST is really will keep you, because realize that you do. I was actually talking with Carl the other day because he's the one because he's already a millionaire. He's good. So I'm learning stuff from him, and learning from somebody that's already a millionaire, and he's also a brother in Christ too. It's kind of encourages you. And so seeing how he's come up, and I've been watching him since I started trading, so that's been a while. But he's been a good mentor. He told me, I've been teaching pretty good, and watching everything, how everything goes, and I'm giving out what he gives me, but also breaking it down to where it's even simpler.
So how much have you made so far, just to inspire myself?
To inspire you. Okay, so how much I've made so far, I'll say.
Yeah, because you're like about up 30K.
Yes, about that, and then losses. So I think overall, altogether without loss, like if we're at it altogether with losses, without losses, 50. 50K, but with losses around like 35.
About 35. And was
Yeah.
that within 2 months? Within the last 2 months?
Last 2 months.
Okay.
So
cool.
No more losing. I said I want 6 figures.
Yeah, right.
I want to go on vacation.
Well, we're right behind you. I'll take 5. I'll even take 4.
Right. Yeah, take 4.
I was gonna ask you. Oh, have you heard of or anybody that's still on this coin called XBTC?
XBTC. I have never heard of an XBTC.
Yeah, apparently that's a coin that it's a new. I don't know if it's a new coin or whatever, but somebody posted that on a group that I'm on. It was at 50. I think it was at like 52 cents. It's at 61 cents now.
Wow.
And I think you can only get it on Bittrex. But I was just wondering if anybody is Paul on there. Is Paul on?
I believe he is. Let me see. Yes, he is on.
Paul, have you heard of XBTC? Oh, maybe he's busy. Yeah. Yeah. Okay. I was just wondering.
I could hear you, but I was sitting there thinking it does sound familiar, but I don't know anything about it. But I'm looking it up because I have to.
Yeah, it's on
I'll go ahead and stop the recording.
Somebody posted.